We forecast prices and fundamentals. Whether you're a trader, producer, or consumer, you can hedge your bets with Montel's diverse forecasting portfolio. Contact us at sales@montelnews.com for more info and a free trial.
Hello listeners and welcome to the Montel Weekly Podcast, bringing you energy matters in an informal setting. This week's topic is gas. European gas prices have surged to multi-year highs in recent weeks amid concerns over supply, both pipeline and LNG, very high carbon prices, colder weather and low storage levels. To talk us through current market dynamics, what's really happening at the moment, the main price drivers and the outlook for the coming weeks is Bryan of Refinitiv and his colleague Iryna, Sereda, also from Refinitiv but based in Kiev. A very warm welcome to you both.
Thank you. Thank you for having us.
Hi, Richard. Nice to speak to you again. Been a while.
Welcome back, Wayne. How are you doing?
Very well, thank you. Very well. Things are on the up.
Excellent.
So, yeah, it's looking a lot better.
Happy that the barber shops have reopened?
Yeah, always good to be able to go and do those sort of things at the gym as well. And obviously the local distilleries. So, yeah, I think we're definitely in a better place.
Excellent. And Iryna, how's life in Kiev under COVID? We don't hear so much about the Ukraine.
Yeah, actually it is getting better. We are out of lockdown since 30th of April. Now we are allowed to go to restaurants, to visit shopping malls. So it is getting better.
Excellent. I want to start off by talking about current market dynamics. Wayne, was the market or sort of market participants a bit complacent given, what happened last year and very low prices? I mean, this year been quite a rude shock.
In terms of prices, it's definitely a rude shock. If you look at the sort of levels where prices are trading at on Thursday, we're seeing prices around 25 euros per megawatt hour on TTF day ahead. If you go back to this time last year, we were at 5.5 euros per megawatt hour. And I was even having a little look earlier, and I think by the 21st of May, we'd fallen to 3 euros a megawatt hour. So that alone tells you the difference. Similar story with the MBP, really, which is an unbelievable 53 pence per therm higher today or Thursday than it was in 2020. So price-wise, it's a completely different situation. And of course, the fundamentals of the market are quite different this year as well. So yeah, there's quite a lot going on at the moment that's contributing to this high price environment we're currently in.
What are the main drivers, Wayne?
Well, the extant storage concern is obviously the main problem here compared to last year when storages were quite elevated and full quite quickly. This year, current storage levels are around 30% for the EU. Again, this time last year, we're around 65%. So huge amount to be replenished. And then normally, obviously, April is the start of injection season, but we've actually seen quite a lot of withdrawals. There was net withdrawals at some of the large facilities that Gazprom has storage in at Hayden and Rydek, Bergamir as well. UK storage facilities are close to critical levels. And again, that's driven by the cold weather. We've seen it's the coldest April in around 35 years. And that's seen a real unseasonable amount of incremental heating demand still here. Even today, it's quite cold in the UK, and similar story across Northwest Europe, really, which is, again, driving that additional demand, which has fed into the prices. We've also got a slowdown in LNG at the moment. We've seen a change in the Asian buying behavior in terms of restocking starting a bit earlier, perhaps slightly burnt from what happened earlier this year and the back end of last year. But we can touch upon that a bit later on. Also, look at related fuels, look at carbon surging towards 50 euros a tonne. I think, again, this time last year, carbon was around, I think, 22 euro mark. Coal, oil were all depressed this time last year. So there's actually quite a lot of bullish events going on in the market at the moment. A lot more maintenance as well. Last year, a lot of maintenance was cancelled due to COVID. This year, we're seeing extensive maintenance in Norway and on the UK continental shelf. So there's quite a lot of things. And of course, the big news yesterday, just to really the sort of another bullish nail in the price's coffin, was the situation at Montel, where they detected a leak in a pipeline. So they've now, send out will now be zero for the remainder of the month, which previously was nominated at, I think, 276 gigawatt hours per day. So there's a lot going on. Yes. I could go on, but I think we'll stop there for the moment.
Absolutely. So we're recording, late on Thursday, and this happened. The Montel was on Wednesday, but
yeah,
now with warmer weather ahead, is this going to see prices ease maybe as we head into summer?
Well, definitely. I think in North Australia, I think we see a rise next week shortly. But again, they stay quite suppressed for most of May, which isn't great. But if you look at some of the longer range forecasts, we're seeing a warmer than average, perhaps June and July, which hopefully would compensate for it. But I think at the moment, yes, a warming up of temperatures would help because we would see a drop in LDZ demand, which again is high, kind of exacerbated by COVID, and obviously more people still under work from home conditions, etc. But I think what we need is a bit more on the supply front as well, really, especially from LNG, which has slowed. I think it ramped up massively in April. I think 20% increase month on month, and we were close to last year's levels. But this month thus far, we've seen a slowdown for various different reasons, including, I mentioned, what was reported on Wednesday afternoon.
Well, I want to touch on some of these issues a bit later on in the pod, but there's also another aspect which you haven't mentioned. I'd like to bring in Iryna here that, was it last week or a couple of weeks ago, we had an issue about Russia and transit capacity through Ukraine. What was going on here, Iryna?
Yeah, that's actually a very good question. So it actually happened on 27th of April. That was the day when Ukrainian TSO offered some extra capacity on the Russian border at the Sudzha border point. And actually, that was the first time when Ukrainian TSO was allowed to offer interruptible capacity on Russian border. And according to EU network code regulation, the TSO is only allowed to offer interruptible capacity once the firm capacity is booked. So that's what happened back in April. All capacity for May has been booked by Gazprom, and it allowed Ukrainian TSO to offer some interruptible capacity. And that was a big event on the market, as everyone was closely watching what would happen if Gazprom is going to book it or not. And the result of the auction was that zero capacity has been allocated, meaning that Gazprom was not interested in booking some more capacity for May. And it is interesting to see what will happen for June.
What do you expect for June? Do you see then the Gazprom to book this interruptible capacity next month?
Yeah, it is highly likely that Gazprom will book a firm capacity as it usually does. And looking back into previous months, the company is usually booking a firm capacity. But for interruptible, it's a big question because we are heading into injection season, and as Wayne already mentioned before, storages across Europe are heavily depleted, including the ones that Gazprom has share in. So it is a very good and interesting question to watch for the next months to see if Gazprom will be willing to transit more gas via Ukraine.
For those listeners who are not aware of the difference between firm and interruptible capacity, what is the difference there?
Firm capacity is basically a guaranteed capacity, while interruptible one, it depends on something, and usually it depends on the physical flows.
What was Gazprom doing here? Can you explain why it didn't book any of this interruptible capacity? What's the reasons behind that? I mean, we can only speculate, I know, but because you're not a Gazprom spokesperson, but what do you think lies behind that decision?
Gazprom can choose different strategies for this injection season. One of them would be to sell less gas on its ESP platform, and by drop in sales on ESP, it will offset its refill of storages in Europe. Another strategy would be to send more gas via Ukraine as we head further into injection season. And we've seen for the last months, Gazprom has been sending more gas at capacity via Yamal and via Nord Stream. So the only way where the company can send more gas would be via Ukraine.
Is there a political element to this, and a little reminder from Gazprom to say, you guys are very reliant on our fuel here?
Yes, of course. I think with Gazprom, it's always some geopolitical background, and we've seen it before. So maybe this time it's again some kind of strategy from Gazprom to maybe to lift the prices artificially in Europe, or maybe some other kind of strategies there.
So a combination of sort of economics, exploiting a tight market in Europe, but also a part geopolitics as well.
Yeah, for sure.
What's your view here, Wayne? I mean, does the EU need Ukrainian gas?
Well, we need Russian gas for sure.
Via Ukraine, absolutely. Yeah, it's not,
most definitely. Yeah, I think we do. And I think it's interesting what Iryna was saying there, and it's something we've all been thinking about, is what is Gazprom's strategy behind it, especially when you look at where their storages are. The fact they didn't take up any interruptible capacity at the last auction, it could be, and again, this is, like you said, everyone's got their own sort of theory behind this. It could be a case of wait until later into the summer season, then start the backloading injections, or it could be a case of highlighting, like you mentioned at the start, hey, we're important, you need our gas. And don't forget Nord Stream. Nord Stream 2 is 95% complete. And I think the latest advice, they were saying that, we should, the construction is very close to being complete, dependent on certain things like the weather, etc. And it's in full compliance with the grants, etc. So we could see that, one of the reasons too. So there's several strategies here, or several reasons behind what Gazprom may or may not be planning over the next few months. But one thing's for sure is that they will dictate if and when they decide to whether buy additional volumes or put additional volumes into the market, and will be held hostage to that. As we saw when there was rumours they were going to buy the additional capacity, I think the market fell 6%. Soon as the auction happened, as Iryna said, that 6% was swiftly retraced. So it just shows where the market views these additional capacities. And I still think Gazprom will need to do it over this summer, for sure.
The other aspect here is there's an election in Germany in September. According to current polls, the Greens are ahead, and they're not so keen on Nord Stream 2. So do you think there is a danger here that should there be a government with a Green Chancellor, that the whole thing could collapse?
Well, yeah, but as you remember, when I and I've harked back to this before, when I presented for you guys in Dusseldorf in what seems like an eternity ago, and I think it was 2018, we were speaking about Nord Stream 2 then, the political side of it, and I still think it will go ahead, and I don't think the Green Party could stop that. I think a couple of weeks ago, the German energy minister said that we still need Nord Stream, and I think Germany definitely needs it. So there will be opposition, of course, but I still think it's going to go ahead. There's been a lot of time, money invested into this project, and we are at 95% completion with 120 or so kilometres left. So surely it's going to go ahead and resume or commence commercial operations. But who knows when? That's the point.
I think the only certainty is that there's going to be some sort of delay, or it's certainly not on track. But what's the view from the Ukraine, Iryna? I mean, about Nord Stream 2.
Yeah, so in terms of Ukraine, looking into short perspective for 2020-2024, we've got an agreement with Gazprom where it is agreed that 65 BCM has to be booked or paid for in 2020, and for the rest of the period it is 40 BCM. So Ukrainian TSO and Ukraine are secured for up to 2024. But looking into longer term perspective, Ukraine would have to think about alternative ways of how to utilize its system and how to keep it operational. Because as we've seen with previously with Nord Stream 1, Gazprom diverted quite a big portion of gas transit away from Ukraine and to Nord Stream. So probably that is something that will happen with Nord Stream 2 as well. And we don't have to forget about Turk Stream, which is also quite an important one, and it is already diverting a big portion of Russian gas transit from Ukraine.
So the launch of Turk Stream has affected some of the flows via the Ukraine then, Iryna?
Yes, of course. We saw a big impact of launch of Turk Stream on Ukraine. And since it started in early 2020, we saw that volumes that Ukraine was transiting to Bulgaria, Greece, Northern Macedonia, Turkey, everything was diverted to Turk Stream, and Ukraine was not getting anything. And then again, early this year, we saw the extension of Turk Stream onshore section, which also diverted some volumes from Ukraine and to Turk Stream, and supply to Serbia was done via Turk Stream, which is around 2 BCM. And then again, starting from April, Romania joined supplies from Turk Stream, and Ukraine is not transiting gas there anymore. So this leaves only Moldova in the southern direction that receives gas via Ukraine. Another big risk would be if Hungary decides to join supplies from Turk Stream later this year, as they are already planning to have a link with Serbia, which would allow them to get gas via Turk Stream rather than Ukraine. So overall, Ukraine already lost around 15 BCM of gas transit, of Russian gas transit, and another 10 to 12 BCM in case Hungary decides to switch to Turk Stream as well. So it's a big volumes of gas that Ukraine is losing.
Yeah, that's a sizable reduction. So obviously, at the moment, with a lot of LNG being redirected to Asia, Europe is more dependent on Russian supply. But what needs to happen to get some of these LNG cargoes sort of coming back to Europe, Wayne? I mean, do we need a sort of narrow price spread between the Japan, the JKM price and the TTF or MBP to entice it back?
Yes, most definitely, because we've seen volumes start to get redirected towards Asia over recent weeks. And as I mentioned, there's a bit of a surprise here. We expected quite a large surplus of LNG into Northwest Europe this summer, and we still can see it, obviously, later on in the summer, because we're not going to be seeing the level of US cancellations that we saw last summer. But at the moment, you've got this strong restocking demand from Asia. You've got charter rates starting to rise again. You've got a lot of things are tightening up in terms of even Hammerfest as well. I think they extended that now till March 2022. So there's quite a lot of issues in the LNG market. And I think the sort of Asian market and this earlier than usual restocking demand, and of course the onset of cooling season, is partly related to what happened earlier this year and towards the back end of last year, when many players were caught out by surprise. And obviously we saw the price rise to historical levels. So I think there's an element of that involved as well. But yeah, I mean, the recent upside we've seen in prices in European gas hubs is bringing that closer, and we should start to see some redirection over the coming weeks. I say redirection, but we'll see some cargoes returning to Europe over Asia. But it's very strong demand in both basins now. So yeah, it's not what we expected.
So it's high prices in both markets, but do you expect to see that spread between them, the price differential sort of narrowing in to an extent where the cargoes come flowing back?
Yeah, once we see a bit of a slowdown happening in this Asian demand, then hopefully we'll see with the European hubs are rising. So we'll see that spread make it a lot more advantageous to send cargoes back over here. Whereas the US, we're still expecting, and we're still seeing cargoes arrive from the US in West Europe, probably even more so later in the year, in June and July, like we saw the cancellations last year. We expect even more LNG supply from the US this year. And if you look at the feed gas numbers and obviously additional trains, etc., we can expect that to help facilitate the quickening of refilling of European storages.
One of the key elements here is the subsiding of Asian LNG demand. I mean, that's going to be a key element. I mean, if I can pinpoint you, do you see it sort of weeks away, months away? Do you see it happening beginning of June, end of June? Mate, can I pin you down a bit here?
It's hard because there's a few things going on. You've actually got the Chinese and the Japanese buyers return from holidays soon, so we might see an uptick in spot demand there. We've got restrictions in South Korea on coal burn, so that's going to incentivize more. Japan, obviously, demand is a bit higher, but now probably we're going to get an impact from COVID, especially on city gas. And also in India. India is obviously going to pare back and we've seen a couple of cargoes cancelled already. So India is going to pare its demand in light of the COVID advancement there at the moment. So when you say pinpoint, I'm hopeful of a return in the next month. Hopefully things will look a bit brighter.
So that's when prices in Europe will also start to ease, or will they need to stay at that kind of level, to be attractive for those cargoes?
Yeah, we'd like to think the prices might ease a little touch, but as you can see, they're pretty strong at the moment. We've got momentum. We've had about, 8 up days in a row on the MBP and 7 out of the last 8 or 9 in the TTF. So momentum's strong, and it's supportive when you look at all the factors, like I mentioned, combined earlier. It kind of supports, even though it does seem quite outrageous when you take it back to last year. But this is a very different year in many aspects. And we're also seeing some sort of green shoots of recovery in terms of economic demand. And if you look at crude, which obviously is the bellwether for global demand, it's is trying to get towards $70 compared to this time last year. It was half the price. So I think things are going to start heating up over the next month or two. And I think in terms of the storages as well, I mean, we still have the view here at Refinitiv that there were going to be stronger injections into storage in Q3. And I think that backloading looks a lot more probable now, especially when you take a look at the spreads. So we're hopeful of a little easing in the coming weeks, but especially from such highs, and we could expect it. But there's a lot of surprises been happening in the market this last year. I was even mentioning this to someone the other day, like the Suez Canal issue, what happened in terms of in January with the LNG. I mean, there's been one thing after another really at the moment. So the volatility, as I mentioned before, close to close, is highest it's been for years. So all this is making things quite unpredictable and hard to sort of forecast at the moment.
Absolutely. So in terms of storage then, Wayne, I mean, as you've mentioned several times, it's a key factor here. And you know, the injection season has been delayed. Do you think the storage will be filled by winter, in time for winter?
We expect it to be close to fullness by the end of the injection season, but we actually expected injections, like most people, obviously, the market to start a lot earlier. As I mentioned, we've had net withdrawals in many big facilities in April. And with this persisting cold weather, that may continue, and also the spreads to keep harping back to them. But if you look now, you're better off taking that gas out of storage now and then re-injecting, you know, looking to inject later on when prices start to ease, because we're in a really high price environment at the moment. And with these spreads with front months at the premium, then why would you start injecting into storage now? So I think price optimization or storage optimization is key as well. But yeah, I still believe we'll get filled. But if the LNG that we expect doesn't come and Gazprom don't ramp up their imports and we have any additional issues, there's quite a lot of maintenance this summer that could be extended, or we could foresee more demand than we expect once we start coming out of these COVID restrictions, which are looking like more possible, more so in the UK first and then a bit more so in Europe later on in the year. So we would expect it to be close to fullness. But if you look at the prices now, this risk premium that's now baked into these prices tell you the market isn't so sure.
Yeah.
So
what would you think in terms of going forward? Is there, you know, a greater likelihood that we'll stay at this level for longer, or are we likely to see easing by, you know, mid-June?
I'm hopeful that if we come back and if I speak to you in a month's time, that prices would be a bit lower.
Yeah.
Tell you things have got a lot better in terms of supply and the demand. Obviously, we don't normally talk about this sort of demand from heating going into, it's May and I'm wearing jackets out and it's cold in the morning, like 1 degree this morning. So we need to see that will change the dynamic slightly, as will a sort of increase in LNG flux into Northwest Europe, which can only help. And like I said, it was another nail in the coffin in terms of anyone who was bearish with what happened at Montel. So there's just another factor.
Absolutely. I think yesterday I looked out the window and it was snowing here in Oslo, and so that's happening in May, which is not so usual. But looking out to the winter, we've had the cold winter in Asia was a key driver 6 months ago. Is this, is there also added concern that this could happen again?
Definitely. We saw it happen, and I think that's what I mentioned, touched upon earlier. I think there's a little bit of the sort of nervousness from players in the Asia market now, concerned that they don't want a repeat of last year. No one wants to pay them prices. No one expected them prices that we saw with the confluence of events. So I think an element of what we're seeing now is definitely attributed to that. So I think with that in mind, if a lot more participants are happier with their storages being filled a lot earlier and we get closer to the winter, then I imagine that we might not foresee such problems. But I can't control the weather, Richard.
You can control many things, Wayne, but the weather's not one of them.
I can't control
unfortunately.
the weather.
But you touched on one aspect which I want to just sort of to ask you about just finally. I don't know whether it doesn't seem quite right to talk about post-COVID when we see what's happening in India and in other parts of the world, but in certain parts of Europe, certainly with the vaccination drive, and we can see a sort of light at the end of the tunnel. What's your view here on demand going forward? If I can both ask you, Wayne, and then you, Iryna.
We saw, if you look through what happened in this heating season, I think European gas demand was up about 5-6% year on year. And again, that's attributed to the colder conditions and also the exacerbated by people, more people being in their domestic residence, as well as other big, large spaces that don't require the heating side of it. But I think industrial demand will start to pick up. And we're already seeing that now. I've seen some countries now where demand is picking up. And you got to remember last year when we had some of the more draconian restrictions, especially in countries like Italy, a lot of the heavy manufacturing was curtailed. That's not the case now. So we are seeing more demand. And as you rightly pointed out, once we start moving a bit more, once the sort of mobility side of things starts to improve, I think we will see that demand start to increase. And again, that can be another bullish risk. If we're in a certain situation like we are now with, certain market conditions dictating what we're seeing in terms of tightness. So, and I haven't touched on renewables as well. I mean, they've been pretty weak this year as well, which has supported even stronger use of gas this year.
Yeah, absolutely. And what's your view here, Iryna, and then the post-COVID outlook for gas demand?
Yeah, I would have to agree here with Wayne that as life is getting back to normal, we would probably see higher demand coming from industrial sector as production is getting back to normal, and also people are starting slowly but still returning back to offices. So yeah, we would probably see life getting back to normal.
That's good to hear. I think if I were to summarize what you guys have been saying, if we compare 2021 or certainly the month so far compared to the same period last year, it's chalk and cheese, really. I think so. It's to coin a phrase. So, guys, thanks very much for being on the Montel Weekly podcast. Look forward to inviting you back and discussing the outlook ahead of the winter possibly as well, once we get into Q3 at some stage.
Yes, thank you, Richard. It's always nice to come and speak to you guys. And you actually, took the words right out of my mouth there. It's a complete contrast, chalk and cheese, when looking at summer 20 to summer 21. So, yeah, let's expect that volatility and uncertainty to continue right until we fill these storages. So, yeah. Hopefully when we speak again, things will be different, not only in the gas world, but also in the normal world. So yeah, here's to that.
Thank you, Wayne. And thank you, Iryna.
Thank you so much, Richard. Thank you.
So listeners, you can now follow the podcast on our own Twitter account, aptly named the Montel Weekly Podcast. Please direct message any suggestions, questions, or, let us know if you think you have a good idea for a guest on the show. You can also send us an email to podcast@montelnews.com. Lastly, remember to keep up to date with all that's happening in energy markets on Montel News. You can subscribe on Apple Podcasts and Spotify or wherever you get your podcasts from. Thank you and goodbye.